Hello and good afternoon. My name is Matthew McCora. We're here with our special event with Investors Expos, and I'm excited to be here with you. I'll go through a brief introduction here in a few minutes after we go through a few of the housekeeping items here. But I do want to welcome you. Happy Tuesday to you. Exciting times here in the markets as of late. We're going to be diving deep into that, and more so importantly, how to identify breakout opportunities. We're not talking about 2, 3, 4% moves. We're talking about double-digit gains. I'm going to show you a step-by-step process on how to identify them for yourselves on the fly, basically on demand. I'm going to give you very specific formulas, search criteria to apply when you are ready to trade, and you'll pull up a list of specific stocks that are in an ideal pattern to trade and take advantage of a pending breakout move. So definitely excited to be here. The minimum time is really, to me, what's important, because the strategy today is not about spending hours in front of your charts researching and drawing all over charts and trying to leverage time into making money, meaning the more time you spend, the more money you can make. To me, I like to work the opposite side of that equation. To me, less is more. The less you spend, the less likely you're going to overtrade, right? And so we'll talk about that in more detail in a moment. But before we do that, let's make sure everything's working properly as far as the audio and video is concerned. So let's just run through a simple sound check. Now we're using GoToWebinar, of course, and many of you may already be familiar with how to communicate with it. Being an attendee, for those that are newer to it, we use the question section, which on the screen in front of you, you'll be able to see the slide of what that looks like. So we're going to use that question section. It's private, it's secure, no one can see your comments except for you and of course us on our end. I'm not here by myself. I also have a team of moderators that's helping facilitate the event today. So if you can hear me, if you can see the slide that says sound check, just type in a quick note into that question section. I just want to make sure we're coming across clear, and that way we can hit the ground running. Thank you, Linda, appreciate it. Appreciate the early feedback. Thank you, Jim, and Paul, I've got you loud and clear as well. Looks like we're good to go. All right, so appreciate all the comments early on. I'm not going to go through everyone's name individually. Once I see a few come through, I know that everything is working well. Thank you, Robert, appreciate it. You always bring a smile to my face. All right, appreciate it. So keep in mind, I like to keep these events more so as a workshop than a lecture. I like to keep this as engaging as possible. So at any point in time, if there's a question about a concept, maybe not quite sure what indicator I have on the charts, anything like that, just let me know in the question section. I'll be able to see it and respond accordingly. So feel free to fire away as these questions come out. Now, just to set the tone for the day, we're going to be talking about momentum and trend patterns. I'm going to show you a very clear-cut way to identify these patterns using a up and down or vertical approach, where we align candlesticks, we line certain indicators up at one time. Think of it as that perfect storm type of event, where we have perfect alignment with historical indicators and data that tells us that something big's about to happen. Something's about to change in the market dramatically, and that's shifting from down to up, from up to down. That's also being able to identify when the market's running hot, how to identify the end of that strong movement. Okay, so it's not only about a trend change, it's also when a trend is about to end. So we'll talk about that throughout today's event. And so I want you to rest at ease knowing that the strategy is not going to take you months and months and months to figure out. In fact, the opposite impact is felt when you see this for the first time. If in fact this is the first time, some of you I can recognize already, some of you are active clients of mine already, some of you I've seen in these events before, and then some of you I don't recognize, so I will introduce myself more formally in a moment, just to catch you up to speed. So the type of trading opportunities is very simple to see. I'm going to show you a couple of examples of trades that have leveraged this concept today, where in this example, this is a Pepsi trade from PepsiCo from a few months ago. I'm going to show you some recent trades here in the live market. I don't like to spend a lot of time on slides, but I do want to let you know the types of trades. So the majority of what you're going to see today is around options trading, though we use the underlying stock pattern to find the option to trade. This is taking advantage of a bearish breakout where we had a strong bullish run ended, we identified the end of it, and we took advantage of the counter move. All right, so think about the concept fast up, fast down. It also works opposite where you go fast down, fast up again. Okay, so this is just one of those different ways we leverage this type of strategy. Now, what you're seeing in front of you now is an email that was sent to my traders that follow me, giving them this very specific trade on Pepsi. The type of detail that we're going to use to set up a trade is complete. It's end to end. Okay, the type of trading is all done in 15 minutes or less. So we identify a pattern, we have a search criteria that we use using scanners. We have a list of stocks that pull up. Based on the list that pulls up, we're able to then dive into determining the direction we're going to trade, obviously the symbol we're going to trade. So in this example is Pepsi buying a long put. We had the expiration lined up. We had the strike price already determined. And then we had, for those that like a ceiling on the option premium, then I give that out in advance. That's why you'll see the option premium limit. And then the 3 price points below that, where it says stock trigger, stock stop loss, stock profit target, that's us utilizing the underlying stock to drive the trading decision. So everything's done from a top-down perspective, meaning we trade options a lot. And what we do is we first search the market for the underlying stock. Once we find the stock that's poised to move, then we simply drop down to the option chain selection process, which with the checklist I'm going to share with you all today is 15 minutes or less on the trading setup. But every piece of the puzzle is done up front. We know when we're going to buy the option based on the trigger. We have a protective stop loss, so we can eliminate, well, not eliminate. There's always going to be losses involved in trading, but limit losses. And then we also have a predetermined profit target to then exit. So the entire option trade, you'll see, is controlled and set up using this stock itself, which makes perfect sense when you think about how options work. Options are a derivative of the underlying stock itself, right? So as the stock price goes up and down, the options premiums go up and down accordingly. So I just want to show you a glimpse into what the output is, right? The input of trading in our process is finding a stock poised to break out. Output is we walk away with a clear-cut end-to-end plan for managing the option trade. Now, if any of this seems like a foreign language, don't worry. We'll fill the gap in, I can promise you that. But I just want you to see the output. So using that same model, here's another trade from Devon Energy. This is buying a long call. So this was a bullish breakout that started back here and able to follow it end to end on the trade. So it doesn't matter if it's a red move, bearish move, bullish moves. We're looking for very specific patterns that historically give us insight to the next big breakout. And that's what we're going to be focusing on giving you all today. I'm going to give it to you. I'm going to give you the exact formula. Now, before we get too far in, I've got to go through the housekeeping items. And the number one housekeeping item is I need to disclose that trading in the financial markets carries risk. If I'm the first person that's told you that, then I'm glad I'm here. But many of you that have been in any online presentation such as this, then you know full well that you can lose money in a trade. You can lose your entire account. So for us, we like to focus on risk management. Real simple way to make sure you don't overextend yourselves is to only use risk capital. Risk capital is money that if you do lose, you can still keep food on the table and keep a roof over your heads. Okay, so I think we're all adults, but I still need to make sure that I disclose that. It's my role anytime I talk about making money, both in the past as well as into the future. I've got to disclose that there's a risk associated in investing. So we're going to get through a very simple and repeatable process today. I'm not here to try to wow you with a highly complex strategy that takes you months and months and months to figure out. In fact, my goal is to have each and every one of you today walk away with a clear-cut understanding of how to apply the strategy I'm going to give you all. So not weeks, not months, definitely not days, but in a few hours, you can fully understand exactly how you can find the next breakout move. And once again, it doesn't matter if it's a bullish move or bearish move. You're going to be able to identify either side of it. Now, my goal, once again, I like to think of this session and these sessions that I host as more of a workshop versus a lecture. So I really want you to walk away with applicable tactics to identify trend patterns and momentum shifts in the market. And not just to see them, but to then become able to trade those movements. Okay, so I want to take it all the way down to empowerment of actually setting up trades on your own. And if you don't want to do it on your own, that's fine. You can follow my signals. Okay, so I do send out my cherry pick trades as a service. If you like the concept, if the concept makes sense, and if you see value in this method of trading that I'm going to share with you all today, then ultimately our goal is to make money. All right, so simple, repeatable is the overarching goal. I want to empower. I want to provide a workshop environment here today versus a lecture. And of course, it's all about getting a return on investment. Now, for those that have yet to meet, I've been in this industry since 2007. I started out almost like I'm doing here today, where I was as a teaching coach and mentor. And so to become confident enough and appropriate enough to be in front of a room in front of traders like yourselves, I had to learn how to trade the financial market. So my career path is slightly different in the financial markets than many of you. I was paid to learn how to trade the financial markets because that was my job. I was hired, got a paycheck to do it. I was instantly hooked on the market after a few weeks of my intense training. In fact, I was taught by what some would call by someone that was called and still is to this day, called the father of Fibonacci. So if you Google that, you can find out who one of my early mentors was. And so I have a lot of confidence and tenure and experience in trading technically from a charting basis, from drawing manually simple concepts to advanced concepts. Someone called me a master chartist based on that skill that I've acquired over my years. But the reason I bring up this background is because as I work through the organization, I was under the sales and marketing umbrella. So I was hired to once again become a coach and mentor in the markets to the clients of the company. It was under the sales and marketing umbrella. Well, through my tenure there, I ultimately became the chief revenue officer, which was effectively the second highest position in the organization, second to the CEO and president. That exposure helped to really set a lot of experience from a tactical basis of trading, because I was also responsible for the product team. Okay, so working with the experts that we had on staff, developing new products, technology services such as charting, different scanning software, automated trading software, all the way down to technical education. So with that experience, I was able to see behind the scenes on how products were created. And also under my purview was the customer support teams. So not only was it sales and marketing, but it was also customer support. And so with that, I was also to see the types of issues and trials and tribulations that retail traders faced. And we had thousands and thousands and thousands of traders from all walks of life, from first-time traders to seasoned investors. So there was no shortage of cases of issues that traders face. And so some of the issues, though they feel unique, there was 5 key buckets where traders run into issues. Number one is market direction, getting the direction down, right? So you thought it was going up, but everyone else thought it was going down. When you're wrong when it comes to direction, that's known as being on the wrong side of the trade. what that feels like is when you buy something, then the market goes against you, right? It goes the opposite way. So you're excited, you think everything's about to go up, but then ultimately the price goes down, and that's not a pleasant feeling, right? That's what I describe as a shock and awe event, right? You're shocked and you sit back in awe because you don't know what happened. You spent all this time researching, and ultimately you were wrong. And when you're wrong in the financial markets, that means you lose money. So number one, that's the biggest issue that I found that traders face, is having a consistent and reliable way to know if the market's going to go up or if it's going to go down. I say markets, but that could be Apple, that could be Tesla, that could be the S&P 500. It doesn't matter what you're trading. Getting direction right is obviously very important. The second big issue that I found is that people did not know when to get into trades, right? The timing aspect of getting in and then obviously getting out. So understanding timing was obviously another big issue, and many of you I know face that on a daily basis. Third biggest thing is how to manage your money, right? Knowing when to take profits, when to maximize your profit, how to exit for profit properly. Obviously, the opposite spectrum of that is actually cutting your losses and moving on. The ultimate goal is that we want to cut losses and let profits run. Most traders ultimately flip that equation and they start to let losses run and cut profits. Okay, so those are really the three main objectives I'm going to help you uncover today. Now, 4 and 5 are less subtle. Okay, so those are going to be things that we'll address throughout. But if you can answer the first 3, if you can conquer direction, if you can understand timing, and then if you can understand how to manage the trade once you're in it, I think you can really get a head start on either getting back on track for your profits, or if you're brand new, you can skip the school of hard knocks and get into a strong base of success early on. Okay, but one of the things here that we're going to talk about is money management, equity management. That's widely important. But before I get too far down there, I want to give you an understanding that I've been in the market, taught, not only traded individually myself, but I've taught in events like this for the last, oh my gosh, I don't want to, feels like forever, 16 years now. Thousands and thousands of traders. So what I'm going to show you today is not new. In fact, what it is a compilation of what I picked up through different mentors in my life, just like in your professional lives or even your personal lives. Throughout the different stages of your lives, you've had someone, be it a stranger sometimes, or be it someone that you're close with, family, friends, coworker, that has stepped in at the right time to help you overcome an obstacle, or to help give you motivation, or to inspire you to accomplish another goal. Well, same thing in my personal life when it comes to trading. I've had many different mentors that have helped me define myself as a trader, but more so also as a coach, and being able to stand there with my traders to deal with the windfalls, to understand how to deal with losses, because ultimately everyone loses. I think you could all win. I think there's also losses that occur. It's inevitable. The longer you stay in the financial markets, the more chance you had to become successful. So staying in the game, being able to play the game, is widely important. And a lot of staying in the game and having that longevity is less so about the tactical skill of trading itself, more so it's really the tactical skill of managing your money. That is where you can extend your time to stay in the market, and that's what's ultimately the most important. So we're going to get into all that fun stuff. If there's any questions on my background, let me know. I'll be able to answer them throughout the presentation. But ultimately, I want to get to the fun stuff, and I want to get to the charts, because to me, that's where I can really help versus just talking through a slide. All right, so at this point, I'm going to transition out of the slideshow, and we're going to jump over to the charts. Now, the charts I'm going to pull up here, these are Trading View charts. So if you're familiar with Trading View, then you don't need an introduction. You can use any charting software of your choice. One of the objectives behind the strategy that I deploy and that I teach is I want to be software agnostic, charting software agnostic. I want you to be able to use this tool and this strategy on any software of your choice. If you want to pay hundreds and hundreds of dollars for software, then do it. If you want to use free software, like from your brokers, like Thinkorswim, Charles Schwab, Fidelity, you can go to bar charts, stock charts. There's many resources out there. I use TradingView because it's available across the world. I've got clients from Australia, UK, obviously the US, Mexico, and Asian countries as well. So I don't use my broker's charts because not everyone can have TD Ameritrade and can access Thinkorswim. So I don't want to pigeonhole the strategy to a broker. So instead of doing that, I use TradingView. So it's definitely up to you if you want to use it or not. Any of the indicators here that I have are not proprietary. They're some of the most commonly used indicators in the market. Some of the most commonly used and commonly discussed indicators is what I use. Okay, so that way there's nothing to worry about. You don't have to subscribe to some fancy, expensive software to trade, because ultimately any type of overhead around your business of trading, and I think about trading as a business. So I think in terms of business, well, my business is to generate revenue in the financial markets. Well, it takes money to make some money, right? So I have to invest in overhead. Well, for me, I have a $15 per month overhead for my charting software. So I pay for the Pro Plus. There is a free version of TradingView. I've used the free version for many years. The only reason I upgraded to the $15 a month plan is because of the watch list. We use dozens and dozens of different watch lists throughout our trading for various different advantages. So that's the only reason I pay $15 a month, is because of that. But before that, I didn't need to have watch lists at the degree that I use today. So I just use the free version. But once again, it's up to you. If you want to pay for software, do it. I try to lower the overarching overhead. Now, I'm going to be going through and I'm going to disclose everything on my charts here. Yeah, there's another one. Free watch list on Seeking Alpha. Yeah, Seeking Alpha is another place you can go. Yeah. How accurate are the indicators? Well, you're going to be here to find out. We'll go through all of that right now. Now, what I want to do is let's take this to a different trajectory. I don't want to use any type of stocks that I'm trading now or that I actively follow. So what I want to do is I want you all to give me your stocks to analyze. I want you to give me your stock picks. Give me 1 to 2 of your favorite stock picks. In fact, I'll create a watch list unique to us here today, and we'll go through the strategy based on what you're interested in. It won't be my pre-canned, pre-built list. Let's go through your stuff. So do me a favor, go to the question section now and give me 2 stock symbols. It could be an ETF symbol, it could be a futures symbol, it could be a Forex symbol, it could be a crypto chart. Give me any symbol. I prefer the symbol versus the name. It's just faster to load up. But I want to make this personable to you in the room. So let's make this unique. So go ahead now, and I'll start loading these up. All right, what do we? Oh, we got Walmart coming in. Yeah, Walmart had earnings this morning. Upstart. Let's see, Microsoft, IBM, Tesla. Always a Tesla in the room. We got Google, Apple, Exxon, Honeywell. We got some big old S&P 500, S&P 100 stocks coming in. Yep, let's complete the mama, formerly the FANG stocks. So we got Microsoft, Apple, Amazon. We got Alphabet, Google. Oh, we got Shopify. That's a volatile one. We got Devon. Did I get IBM? Yep, we have IBM. Yes, that's a duplicate. All right, perfect. Now, if you think of some more, you can just drop them in there. If I see them, I'll drop them and I'll add them to the list. But I just prefer to find out, I'm kind of a nerd about this stuff. So I'm always curious to see what you all are interested in. All right, and then we have Align technology. All right, so once again, if there's more that pop up, feel free, we can drop them in. This will not take long. The process of leveraging this strategy, once again, is not going to take us weeks and weeks and weeks to figure out. You're talking about NVIDIA, I'm sure. Okay. Not this OTC one. All right. Yeah, so question, ever trade around X dividend dates? I don't specifically search for dividend dates. You know, it's not part of my search criteria. Say, oh, let me find all the dividend dates coming up and trade the strategy. But, you know, they're definitely easily found on the charts. So if I see them, the expectation around dividends is always, you know, a pullback of whatever the dividend is. So let's go to Walmart. All right, so there's definitely a lot of talk around Walmart. This is one of the big players in the space. They had their earnings this morning before the market opened. Now, this is commentary because I haven't walked you through the strategy yet, but ultimately we talked about this last night. Every Monday night and every Thursday afternoon, we run through what's called a Market Pro Life Club, which is where we go through a deep dive analysis as a group. You know, there's 500 traders, over 500 traders that follow this strategy and follow the analysis in the sessions. So last night we were talking about Walmart because of how important the earnings was, not just for Walmart individually, but also the other like stocks, right? So that's a non-durable area of the market, consumer non-durable. It is a huge portion of many ETFs, individual retail portfolios, and all the way up to institutional hedge funds have positions around Walmart. Okay, so it's a big deal. Once again, not just individually, but across the board. So it's strong to see that Walmart hit their earnings. We had inflation numbers come out higher than expected last week, Tuesday and Thursday. Retail sales on Wednesday was greater than anticipated, you know, 2.5 times higher. So there is an increase now of the FOMC to increase the target rate, federal fund target rate, higher than expected as well through the last week or so. So there's a lot of stuff impacting, you know, of course, the global market. So before we jump too far into Walmart in the actual earnings itself, what I want to do is get more specific to this charting template. Okay, so I'm going to start to break down the concept of number one, trend direction. Number two is understanding when the tide's going to change. Now, the tide change is important. What I mean by tide change is a shift in the movement, right? Something's going up, then it goes down. Something's going down, then it goes up again. Those moments of transition or reversal points is where we want to be. You don't know it yet, but you will. Okay. So ultimately, I'm going to scroll out and I'm going to introduce you to these indicators. Now, there's multiple indicators here that I'm just going to hide for a second. I'm not hiding them so you don't see them. I'm just trying to clear some of the real estate. I'll bring them back up in a moment. What you're seeing here is the core template that we use. Now, it's a very specific sequence of variables used in these moving averages. And that's what these trend lines are here. They're simple moving averages. You can use exponential, you can use weighted if you'd like. I like to keep it simple, so we're using simple here. We're going to start first with a simple walkthrough of what these moving averages are telling us. If you are already familiar with moving averages, just give me a few minutes. Let me catch the rest of the room up to speed, and then we'll keep hitting the ground running, okay? So let's first just walk through what this red line is. This is a trend line, and this trend line is derived by taking a certain amount of days of trading activity. I'm on days because I'm on a daily chart, okay? So that's what I'm using the term day. So every one of these candlesticks is 1 day in the market. This is a 50-day moving average. So it's a very simple formula. And once again, I'm here to try to eliminate as much subjectivity and focus more on the objective side of trading, the objective side, which is math-based. Objective is math. Subjective is like art. It is subjective to one's opinion, to one's backgrounds, to one's viewpoint, mindset, personality, right? We can all look at a piece of art and have varying degrees of opinions about how great or how bad the art is, right? You put up just because there's a Picasso doesn't mean everyone loves the Picasso. That's subjective, right? A lot of opinions are based around subjectivity. So I'll try to stick to objective data. So it's not a maybe answer, it's a yes or no answer. I like to be yes or no so we can have a repeatable process. So the way we look at this is in a relationship. The close price is right now the most recent price since the market's open. So the last price right now is at $146.68. So Walmart is trading now at $146.68. Well, if we don't have anything to compare that to, we don't really know what's occurring or what has happened, right? So the reason that we incorporate trend lines, be it manually or using math-based trend lines like this moving average, we're trying to build an expectation of what's going to happen next. That's what trading is. Okay, what's going to happen next? That's the magic question. So if I take a look at where the 50-day moving average is, what that means is it's the rolling 50 days of the close. So basically you take the 50 days, you add up all of the close prices and you divide it by 50 and you get an average price. So it goes up and down, and you can see by the red trend line here. And it goes back as long as we have data, it'll keep rolling and tallying up what that 50-day average price is. 50 days is 2.5 months worth of trading activity, right? So it's fairly substantial. So if I see the 50-day price today, the average has been $143.86. Well, today we're at $146.69. So we are above the 50-day average price. This is going to become your simple uptrend or downtrend indicator. If we're above the 50-day, you're going to start to think of uptrend. When we're below it, you're going to think downtrend. Okay, so this becomes the simple overarching uptrend, downtrend meter. All right, this is our meter, our GPS, to know if we're going to be going up or going down. Now, we don't look at just one independent data source. Okay, I'm just giving you the basic walkthrough of how we apply this. You can see the shifts that happen. We were below the 50 back here. This is also around an earnings event. You see how we were below, we're bearish. Then we flip. So I'm going to start showing you what happens when we flip and get on top. Okay, so if we're going down and we go up, that's a reversal point. When we're going up and we go down, that's a reversal point. When we're going down, we go up, that's a reversal point. Okay, so that becomes a simplistic approach. You see, I can go to upstart. We're above the 50-day. So at this point, it's not a maybe. Okay, are we above the 50-day moving average? It's a yes or no. You know, if 1766 is the price, the 50-day price is 1663, we are above it. Yes or no? Well, answer is yes, right? We go to Microsoft. We're above it. It's not about how cute we're going to get yet. Okay, I'm not trying to break down this micro retracement. This is a retracement. Okay, are we above or below? Well, we're above. Okay, that's uptrend. IBM, downtrend. Are we below the 50? Yes. Okay. So very quickly, we're able to jump down. I'm just clearing out some of my old analysis as I go. Okay. See, Tesla's above that 50-day. Google just flipped down below the 50-day. Apple's above. Exxon, still above. It's right on it, but it is above it. Honeywell, bearish. Amazon, bullish still. Okay, we're still above it, trying to hold on to support. Shopify just broke that 50-day today. Okay, just switched down. Devon switching down. Align Technology, it's above. NVIDIA, above. Now, once again, I'm not just buying and selling based off one data point. Okay. My goal is to have as many data points on my side as possible. But we need to have an overarching decision, right? We need some basis to be our up or down meter. The 50-day moving average, some of you have heard of it before. Why? Because it's relevant. If you watch any Talking Financial Head show, could be Fox Business, could be Bloomberg, could be CNBC, could be, independent journalist on Substack, right? In the financial markets, could be some on New York Times, Wall Street, the Wall Street Journal, right? It doesn't matter. You're going to hear common used indicators. You're going to hear analysts, and I do air quotes, right? These analysts, they're going to talk about where we're at in relation to the 50-day moving average. You'll hear, especially here over the last several weeks, you've heard a lot of conversation around the 200-day moving average, okay? So the reason there's a lot of reaction and price action around these moving averages is because they're commonly used by big money. Big money follows indicators. You would imagine that these big hedge funds and institutional traders have all this fancy software. Well, they do have fancy software. They do have access to data that we don't have access to unless we want to pay thousands of dollars a year for it, if not more than thousands. We can get the same data, but when it comes to their research and analysis on charts, they use very typical looking indicators that we're familiar with. Now, if a 50-day is our longest term, to set an expectation here, this specific setup, the 10, 20, 50 combination, is built for swing trading. So swing trading is based on time and trade. Now, my definition, there's a lot of loose definitions around scalping, swing trading, and position trading. Scalping is when you're in trades minutes and hours, okay? Sometimes hours and days, right? Scalping is short-term trading. You're in and out. I've got a comment on audio. Is my audio coming through okay? Someone just made a comment about audio. All my systems are green. I just want to double check. Just let me know the audio is coming through clear. Give me a thumbs up or something like that. Okay. Appreciate it. Okay. Just want to make sure that's the worst feeling. Next thing you're talking, and then all of a sudden you look down and it was like no audio for like 10 minutes. So, all right, perfect. So this setup, okay, this 10, 20, 50 combination is just not willy-nilly, okay? There's a scientific objective formula to it. So the 10-day is going to be our inner trend line. It's going to be and that's in blue. And so if you just compare the movement of the up and down volatility, if you look at the 10 versus the 50, you can see the 50 is a smoother line. It's more smooth, okay? It's not as choppy up and down. Yeah, Kim, if you can help this member, he's saying there's no audio. What is the purpose of recording this? So he clearly cannot hear us. All right, they left. So hopefully they try to restart and come back in. Okay, so you see how close the 10-day follows the candlesticks. So if you come back here to this October timeframe, you had the candle start to break above. This is a reversal point. So we were below the 50-day. So below the 50, then we start breaking above the 50. Okay, so we close above that 50. That's a point of reversal. We're going to be looking for these moments. FYI, this specific type of transition, this reversal, is I'll give you the formula to find these. This specific pattern. But as the candlesticks move up, you see how the 50 still heads up, but it's not as dramatic as this 10-day. Well, the reason why, it's only 10 days, right? It's a 10 moving average. So 10 days, once again, I'm on a daily chart. So because it's less data, it moves closer to the current pricing. See, a 50-day average, right, has 50 days behind it, 49 days behind it to catch up, right, to see an impact. So 50 days has a lot of data inside of it, right, versus 10, you can start to see how recent activity can move that 10-day much faster, right? You'll see it shift. So it becomes an early warning signal, okay, that I teach in my more advanced side of this. But ultimately, I'm showing you the relationship. So as that 10 tracks, right, it's more susceptible to be taken out. So it's a constant game of getting taken out. So trend lines are support and resistance. Each one of these trend lines is either a supporting price, meaning they're holding it up, or they're resisting price. So they're either helping hold it up or they're helping to push it down. They're constantly moved. They could be resistance one day, next day they're support. They become a guide, and it'll really start to click as we start to move through different charts. But I want to show you the relationship because this 10 is riding closer. The 50, because of the days and the depth of how much data, is a smoother line. So that's why we use the 50 as more of our longer term trend. Now, I'm going to get rid of the candlesticks for a second and just look at the 3 trend lines together. So the yellow line is the 20-day. That's your middle or your short-term trend line, okay? So you have your inner trend line, which is your closest to, which is the blue one. So the reason I'm using that language is because if you're familiar or trained in technical manual analysis, okay, then that's going to resonate with you. So the 10 is our inner, then we have our short-term trend, which is the 20, and then we have our longer-term trend, which is our 50. So as the market and the candles and the price is above this 50, what happens is the 10 and 20 become your support. Then they can also become resistance. Okay, then they come back into be support. So when they start to break down, right, they start to flip directions, and instead of being on top of the trend lines, we stay below them. And that starts to give us the early indication that the market is going to switch directions. So this understanding of relationships, okay, where are we at against the 10-day? Well, let's go to Walmart. We're at 146.79. Well, the 10-day price is 144. Okay, so we're above the 10-day average price. Well, the 20-day average price has been $143.48. Well, we're above the 20-day price, and of course, we already know we're above the 50-day price. So we're trending above the 10-day, the 20-day, and the 50-day. So that's 3 directional confirmations of an uptrend. So if we move down the line here, let's talk about Upstart. Okay, so Upstart is below the 10, below the 20-day. It's above the 50. So it's still an uptrend, but you can see that there's a lot of momentum down, right? So even though we're above the 50-day, 2 of the 3 trend lines we're below. We're below the short-term 20, the inner 10, okay? So as we start to put these all 3 together, you'll start to understand what to expect next. Well, for me, the next move is going to be down towards the 50. So still above the 50, but it's going to come down and test this, if not take out, okay? So by incorporating all 3, I have a sense of what's taking place in the recent time. Look at Microsoft. Microsoft is below the 10, below the 20. We're still above the 50. So we're still in a uptrend. However, we're in a deep retracement, okay? Took out the 10, took out the 20. My traders know ultimately we're going to come to the 50, okay? But now just by understanding relationships. So look at IBM. How weak is IBM? It's below the 10, below the 20, below the 50. So there's 3 directional confirmations that is pushing and resisting IBM. Tesla is trying to stay on top of the 10. Okay, it's above the 20, above the 50. We're right below the 10. We still have half a day to go today, but so far today, we're below that 10-day moving average. So 2 of the 3 is still bullish for Tesla. Google is below all 3. Just shifted, just broke. Okay, that's a potential reversal getting started right now. You have Apple. below the 10, we're still above the 20. Okay, so we have 2 of the 3 support levels in place. When these get breaking down, odds are we're going to come down anyways. But I'm just showing you how all 3 work. Now, every single one of these symbols you all gave me, these aren't mine, you guys gave me this list. What I'm walking through is just analysis, because when I'm looking for a new trade, I want to be at the moment that precedes a big move, okay, a breakout. So if I look at Exxon here, where was the big breakout? At what point? Well, there's the start. I'm talking about the start of it. Well, there's the start of a big move. If I was going to be buying Exxon, do you think I want to buy it up here? No, I wanted to buy it down here, right? This is that moment of a downtrend, and I'm going to clear out some of that. I just want to make this clear, so I'll get rid of the smaller time frames. Remember that 50-day is our anchor point. That becomes our up or down meter. So Exxon went down, okay? Oh, then we started to shift back up again. That moment here, that's a moment that we can find. We can define this specific pattern on any chart we want and not manually searching for it, okay? But I'm going to highlight where we want to be, okay? At least where I want to be is at the price at the moment that precedes a big move. I want to be ahead of it. I don't want to catch and try to run down a runaway train. I want to be there and catch that train before it takes off. Okay. Well, it may not be a good analogy. I don't want to try to run down my plane heading down to Cozumel, Mexico for a vacation. I don't want to try to run it down the runway, right? I want to be on time and catch it at the gate. I want to catch it before it takes off. Same thing here. I want to catch these movements. Okay. Even recently here, we want to be at these moments here of that up shift as well. Okay. And it's every one of these, right? You go to Amazon. I want to be at that moment of reversal, be it up or down. Doesn't matter if it's bullish or bearish. I'm looking for the biggest percentage move. So I want to be down here, right? See this down and then it goes up, right? Same thing on the down move. You can see Amazon here shifting down. See that fall off happen. And go one step further, okay? Now the big final piece here, I talked about timing, okay, as one of the big obstacles that traders face. These are points of reversals where I've highlighted in yellow. Some of you may be thinking, well, yeah, but Matt, but what about all these other movements? Yeah, if you had the right timing and the right strategy to know that this was a retracement and it was about to go down again, sure, that's ways to make money. I'm talking about the highest probable chance of the largest percentage move to follow. That's what I'm talking about. Not just talking about any move that happens, because moves can happen. Breakouts can occur at different times in a different stage of a trend. I'm talking about having a clear-cut process to find an opportune moment. And I love this comment. There's always one of these comments. Hindsight is 20/20. 100%. Hindsight is 20/20. 100%. I think what the real background of that statement is well, anyone can go back in time, look at a chart and see what happens. Yeah, 100% you can. Well, the value of what I'm going to share with you, the complete total picture, is that you can go back at any time and see how the strategy would play out, because it happens across thousands of stocks all throughout the day. It's a very specific and repeatable process. And that's what any strategy is built on. If you didn't know it, let me educate you. Any piece of analysis, any piece of forecasting uses hindsight. Hindsight is using previous data, previous history, leveraging previous history to try to forecast the next move. If I want to get a trend of Shopify, right? Shopify is at $41.45. If I just had this on my chart, and I'm just putting today's bar, okay? How on earth would anybody know where it's going to go next? Where's Shopify going to go? How am I going to know where it goes? I got another member. I love this one too. All indicators are trailing or lagging, right? That is correct. That is correct. Fibonacci's lagging. MACD's lagging. Trend lines lagging. Support resistance lagging. Candlestick formation lagging. Somebody give me a forward indicator. Who's got a forward indicator? I've never heard of one. Never heard of one. What about earnings? What about earnings? Well, earnings are lagging. Why? Why is earnings lagging? Well, it's last quarter. What about CPI? Well, what about the consumer price index, inflation rate? Oh, that was last month. Price forward? How is price forward? Price is right now. Price is $41.51. That's a forward indicator? That's what happened, right? So I don't know a single indicator, single tool that gives you forward data. So some may say, well, what about statistical analysis where we do deviations to the mean? Well, how do you do that? Well, you've got to take the price, it looks at previous price and tries to forecast the forward price based on statistical analysis and applies levels of Fibonacci sequence to get to statistical analysis. You've got to use some level of previous price, previous data history to build a model for what to expect next. And I love that because we're conditioned. And I look, I've sold hundreds of millions of dollars in products in this industry, directly, indirectly, through my company that I led on the revenue side. I would use that same connotation. I would say our indicator, our strategy, our whatever it may be, our widget is better because all other indicators are lagging, right? It's a fancy slogan, it's a fancy slogan. But every analysis, every research piece, if I'm looking at a company's performance, I can't look at the future performance of Shopify. I can't look at the future performance of Amazon. I can't look to the future performance of IBM because I don't know what IBM is going to do in the future. Even if you look at earnings, why would earnings miss, right? How do earnings miss then? Well, if they knew their company so well, then they would know that what their earnings are going to be in the future, but they don't, right? So I don't say that to try to dissuade you. If you think they're lagging and that's negative, that's fine. If you think they're negative, that's fine. We all have the right to our own opinions. All I'm trying to say is every piece of analysis on a chart, if I'm drawing manually, if I'm using indicators, they are using previous data. If I'm using previous data, then it's lagging because it's not the future data. It's not the future, right? Yeah, and great comment. Bollinger Bands indicate possible move up, okay? Possible move up. Well, how do I use a Bollinger Band? I'm using data now. I'm using past data to then throw it into the future in bands, in price bands. If I'm using, I don't know, we can pull up any one of these. Let's see what's on my list here, right? You can use every single one of these tools. This is just using TradingView's shortcut menu here. If I have to use a previous price to set these up, could be Fibonacci's, could be a pitchfork, could be a fib channel, Gann fans, could be fib circles. I'm using data here on the left, and I'm trying to guess I'm trying to use it to forecast the right-hand side here. So, I've got a different level of insight because of all the different products I've created and overseen in my career. So I know what a lot of the connotation is around it. You know, Ichimoku, it's all Ichimoku clouds, right? Those are all at the point of time, right? So like I can change this angle, right? I could change what this candlestick is, and that's what Ichimoku cloud is, right? It's a different type of candlestick. It's giving me different data and a different presentation of data. But if I'm going to use it to go to the right, right? Remember, there's nothing on the right, right? So imagine this is a line. There's a line here on the chart, right? To the right is the unknown, right? There's nothing I can use to the right here. So how do I try to map out the right? Well, my eyes go to the left. So if I see, just keep it simple. I'm not trying, you know, I don't want to dissuade you and make you frustrated. You're like, oh my gosh, none of the indicators, you know, can help me in the future. I'm saying everything is based on a lagging data point, right? Lagging simply means I'm using something that already happened, right? I'm looking at data that already happened. And it could be like when I'm drawing a trend line, right? A manually drawn trend line, and I'm connecting my highs, right? There's my highs, right? How I'm building out the future, right? Remember, this line to the right is the unknown. But I had to even get this trend line, I had to use these previous price highs to do it, right? I mean, if I'm using Fibonacci's and I have a different, I use a different combination of Fibonacci sequence, they're not even Fibonacci's, right? But you see me connecting previous price, and then I'm getting these retracement price levels. Well, the only way I have these on the right hand is because I use the left hand to set up the right side. You know, it's almost like those drawings that, you know, my daughter likes to draw. She's 9 years old, and they have these drawing books where they give you half the drawing. I don't know if any of you have seen those. So imagine you've got a coloring book and you flip to a page and only half of the page is drawn in advance, and then what you're trying to do is to fill the right side of the paper up, right? That's what we're trying to do on a chart. We're trying to fill in the blank on the right hand side. Yeah. So common is Ichi projects out in the future, but it uses previous data to do it. It doesn't take just a blank. It doesn't take like one day, like today, and throw it to the future at any high degree of probability. It's taking a collection of data of the past and building a model into the future. But marketing, right? So once again, I think we've all learned our lesson from the past pandemic on, you know, what and how messaging can be used, right? So if I want to sell you something that's unique and to create levels of value to you, I'm going to try to push down other like systems, right? So if I come up and if I did one thing, and we used to do this all the time in my other company, we would take this setup and I would do this, and I would hide these. So imagine I hid these, okay? So you couldn't see them. I simply just hid them, and I called this the momentum breakout killer strategy that makes you millions. Okay, let's say I called it that. So basically all I did was take indicators that are right in front of you, and I simply just changed some colors and I put a name on it and I locked it. And the only way you can get my amazing widget gadget tool is if you pay me for it. Some of you probably have experienced that yourselves in the market, okay? And what they'll say is what? Oh, well, this is a forward catch. This is not lagging like the other ones. Okay, so there, you know, it's nothing more than a nice, simple marketing tool and a technique, unfortunately. Okay. So if we can understand that history has a way of repeating itself in the market. Now, why? There's a lot of math-based phenomenons that occur, and it's simply because of the human nature of how people operate, how people think, because no matter what, there's human elements involved to trading, even if it's a robot, even if it's AI trading, even if it's high frequency trading, a human developed the software. Okay, up until this point, right now we have all the AI stuff coming out. But ultimately, going back and looking at how a particular pattern played out, understanding the exact setup that led to a move, we then can go back and actually go see all of these different movements happen over and over and over again. Now, what I'm showing you, and I haven't even showed you the completion because the final step is now the when, okay? So we'll come circle back to this lagging concept if you guys want to. But let's talk about to me, one of the most underutilized data indicators out there, and that's volume. So on the bottom half here is a volume indicator. It's a simple volume indicator, nothing fancy about it. It is simply volume. What makes it different is now I've added a simple moving average to the bottom. So there's a trend line now on the bottom, it's dark blue. Now these columns are doing nothing more than telling us what happened in number of shares traded. Okay, this is not dollars and cents down here in volume, it's number of shares traded. So if I take off the average for a second and just show you once again, just the day by day activity, that's what these columns are measuring. So for example, IBM today has traded so far, let's see, 2 million shares, 2.028 million. You see it here in the data box. Okay, that's how many shares have been trading so far. Well, the day before there was 3.4 million shares. Day before that, there was 2.9 million. Day before that, 2.5 million. Independently by itself, it's just data. Okay, there's nothing really to base it against. There's nothing to measure it against to get an idea of, is it high volume? Is it low volume? Is it a typical day? Is it an atypical day? Now, to understand volume, you have to go back to the basic essence of how price action works. Why does price go up? Well, there's more buyers than sellers. Okay, why does price go down? Well, there's more sellers than buyers. Well, what happens when there's a lot more buyers than normal? Does price go up a little bit or price go up a lot? Well, price will go up a lot. Same thing on the opposite side. When there's a whole lot of selling going more than normal, then price goes down a lot, and it goes down fast. It's an inarguable fact about the market, but you all like to come up with different theories against that. That's fine. I love it. I love challenging the status quo. I have no problem doing it. I have no problem with that. I love it. I think that's what is important. That's how we continue to grow and get better is debate, as long as it's, of course, fair and respectful debate. I think we'll do all right. So when I incorporate a basis of measurement, okay, at this point, it's just a moving average. It's a 20-day moving average on volume. It is intentional to be 20 because that's my middle time frame. So I have alignment between my volume and my time indicators. So up top, think of this chart broken up in two pieces. So the top of the chart, the top half above the black line, this is your direction and pattern. So this is all pattern up top. Below is your momentum. Okay, this is your volume momentum area. Now, what we look for volume as is as confirmation. Okay, that's where you now walk the walk instead of talking the talk. So let's go back to this transition that we had back here. Let's go back in time. Let's go use hindsight here to understand how momentums work. So we talked about the importance and the relevance of when we have a trend shift, a trend change, okay? Well, on October 20th here, you could see we had a trend change. We were trending below the 50-day, and then boom. Now, a lot of it was based on big earnings, but that's fine. I don't care the reason why. I'm more important and relevant to know when this moment sets up because I want to take advantage of it. I want to make it tradable. I want to make it actionable so I can take advantage of it. So if you look down below, you see how high this column is versus the trend line. You see how high above that trend line. That's called a surge of trading volume. That's a surge. You see the average back in October was 5 million shares, 5.108 million shares to be exact. That was the average. But on this day, there was 13.6 million shares, over 2.5 times the daily average. Do you think something's brewing? Do you think something's about to happen? Type it a yes if it makes sense that there's a whole lot of volume and we had a trend break. Do you think something's going to shift in IBM? We already know what happens, right? But think at the moment of time, does that make sense? Is it illogical to think that something's going to change? I don't think it's not. Most people that have a fair and honest assessment will say, yeah, that makes sense. Something could happen here, right? Something changed. There was a whole lot of volume. Look how high this is. That's the biggest volume on IBM since July, right? So you're talking about a 3-month volume high. At the exact time, there was a trend break. That's not just happenstance, okay? So obviously it took off from there, right? So the question is, if you can find that moment, is that actionable intel for the future to get into, right? And now this is just one example. You'll be able to go chart after chart after chart and see those movements. Here's Walmart. What do you think is brewing on Walmart? This is today. This is live now. 12 million shares, 12.1 million shares. 5.5 million has been the average. There's a high likelihood that what? Walmart's going to go up or down. Based on just one example so far, what do you think Walmart's going to do in the next coming weeks? You think it's going to go up or down? Yeah. High likelihood it's going to go up, right? I mean, go back in time, see the same formula set up. There's another similar example back here. Just look vertical. Remember I talked about vertical up and down look. 6 million versus 5.5. Over average volume. Look at the shift in the trend. Look at the pattern up here. What happened after that? Okay, big move to follow. Okay, big jump to follow that. All right, you come down to, I don't know, let's go to Tesla. When did this trend line breakout start? Started back here. Look up and down. 234 million shares above the 188 million share average at the time. There was our early indication that Tesla is going to break out. From that point alone, and we're still in the active up, this is still in the active extension move. From that move is up 26% from there. Okay, go to Google. Okay, there's that big reversal point here. Now we're on the opposite move. Look up and down. We had a volume surge, volume spike. At the same time, we had a trend reversal point. That's a buy for Google. That's when we set up our buy for Google, when that moment happens. Same thing happens on a sell-off. Same thing happens on a bearish breakout. Big red bar. Look at the volume. 31 million shares on Google. Average was 18 million. At the same time of that reversal from going up above the 50-day, and then we closed down. Big selling day. Question coming in, how can it be more than one than the other when it's a zero-sum balance? Buyers, sellers equals buyers and vice versa. It's liquidity. Okay, so if I want to buy Google, there's enough inventory I can buy Google. So someone's selling Google at any price because someone could be shorting, right? So if I'm shorting something, I have to get out of it, I have to buy it, right? So that's a form of liquidity that allows us to be buying and selling. And I don't trade. We have very specific search criteria where we're not trading these, over-the-counter stocks, these low-volume stocks, 10,000 share stocks that don't have liquidity, right? They have a lot of volatility because I can come in and buy 5,000 shares of a 10-cent stock and make the price jump because there's no one on the other side, right? But then when I sell, guess what? No one's holding the price up. Price falls back down again. The pump and dump. Okay, I don't trade those. Okay, I don't even look for anywhere close to those types of stocks. And a simple way to get that is simply by what you search for. You'll get what you get what you ask for. If you want that type of trading, you can find them. I personally don't find that to be a consistent way to trade. Me and my traders, we only trade the well-known household name brand companies. We don't trade these off-the-shelf, unknown, low liquidity based stocks. Okay, we're talking about small caps or higher minimums. Okay, so we're looking at $200 million market cap or higher stocks. They have to have shares that average over 1 million shares a day. Okay, for activity. These aren't just your you know, peripheral type stocks. We only trade the best of the best, cream of the crop type of stock symbols. There's enough opportunity to do it without it. Alkesh says, what is more reliable, moving average or EMA? The difference between them is the timing will be different. So your crosses will be different. But ultimately, if you're using all three EMAs, which you should, you don't want to mix up moving averages, simples with exponentials, with weighted. You want to use the same type of moving averages. The accuracy is only off by a few percentage points. I mean, you're talking about a day, you could be a day ahead or a day later. It's not a dramatic shift either way. It's all because we're looking at the market through the same lens. Everything's the same, everything's static, everything has a base analysis. It doesn't matter if I'm trading an ETF, it doesn't matter if we're looking at the S&P 500, it doesn't matter if we're looking at individual stocks themselves. The setup that you see, this template we use for analysis on forecasts in the future, and then we'll use it to find new trades. It's the same base template over and over again. So this list here is all at different points of time. Okay, they're in a different point of time. I'm looking to find, once again, the biggest and best setup to get into a new trade. So there's two hats that I wear when I'm looking at the market. Hat number one is I'm analyzing an existing trade. I'm analyzing the S&P, I'm analyzing the NASDAQ, so I have an understanding of what to expect in the greater market. Okay, so I have an expectation type of analysis using this template. And then if I want to look for new trades, then I'm going to look for a very specific sequence of alignment to have a setup, right? So a new trade, I want to get into a new position is one hat. The second hat is simply analysis, okay? So the reason I get a list from you is just so I could teach the concept of what it does and how it works. The goal is I want to catch a breakout and I don't want to chase it. So I'm not going to be looking at running down a trade. I want to be in front of the trade. So before it moves, I want to be waiting in advance and then let the market move, right? That's what I want to do. That allows me to be set up, fully protected on my trade. I know exactly when I'm getting in, I know when I'm getting out, and I know how to limit any type of risk in the market. That's my end goal anytime I trade, and that's what I teach is an objective pre-setup, so that way we can be ahead of the movement. Okay, that's what the strategy is, and I'm going to give you the checklist now. So we're going to transition away from simply analysis, simply teaching, down to get to an actionable point to find trading opportunities. So to do that, I'm going to leverage a search criteria, and I'm going to come down and I'm going to use pre-built and pre-set up screeners in the market. So if we can find, and I'm going to look first off the bearish side. Okay, so bearish breakouts. Now the question is, well, why are you going to start with bearish side? Well, if I look to the big indexes like the S&P 500, this is where we are today. You can see where this arrow is drawn. This is from last night's analysis. We talked about the fact that we are bearish. We broke these key trend lines up top, the 10 and 20. So I told the room the expectation is we're going to more likely come down to the 50-day moving average. So all of my traders today that were in my event and then that also watched the recording already knew going into today that we have a bearish day on the horizon. We have bearish days on the horizon here. Just knowing that fact alone, just if you take a breath and ask yourself, when you pull up the market today and you saw the red, were you caught off guard? Were you shocked by it, or were you not shocked by it, right? Well, imagine being on the other side where you knew going into today to expect the red day. Your expectation, your anxiety levels, if you're actively engaged in the market, is dramatically lower when you have an expectation of what is going to happen in the future. So that down movement here, we're already prepared for. We're already aware of this coming into the day. In fact, because of the fact that we had our another lower high here where my yellow arrow in the yellow circle is we already knew that this uptrend was waning. It was running out of momentum. We already knew it. Talked about it Thursday last week as well. So none of this movement here the last several days is caught off guard for us. This is something that we already knew and we already planned for. That level of understanding, to me, is really powerful to manage the anxiety levels that involve around trading. Okay, so because of this, we already know the directional bias to look for trading opportunities. So that way we're not trying to swim upstream. We're not going to swim against the current. Now I'm in Florida, so swimming against the current is a bad thing, especially when I'm 45 minutes from New Smyrna Beach, which is the shark bite capital of the world. So being able to understand when it's best to be with the current, right? Even when there's a riptide, it's best to let that riptide take you out. You don't want to fight the riptide, just let it take you out and then swim parallel to the beach until you get out of the riptide. That's for those that are not around beaches and you come down in the summer, just remember that if God forbid you're ever in a riptide scenario, don't fight the riptide, just let it take you out and then swim parallel until you're out of it. You'll get out of the riptide, but you can't fight it. So we already knew the directional bias. Okay, so what do you think I'm looking for? Well, I want to look for stocks that, let's go to SPY. We'll just use this as an example. I want to find moments of time where I've got a reversal, where I'm going to be breaking that 50-day. Something was going up, now they're going down. And I want to be there, and I also want to be there where there's trading volume. So right now, the market's still open, so there's still 3 hours left of the day today, 2 hours and 45 minutes. So more will more likely show up by the end of the day. Okay, but right now as we speak, take a look at what pulls up. I have 8 matches. Now the criteria I'm looking for is very specific. Now you all can take a screenshot of this and you can run this on any scanner you have access to. Most brokers, especially if they're a major broker, they have scanners built into their software. So you can scan using these exact criteria on your own. You don't need to have TradingView to do this. You can go to bar charts. They have a great screener that's free. You can build a list of stocks yourself. But it's very specific on what I'm looking for. I'm not just looking for any type of stock. I'm looking for very specific patterns to line up. So market cap, I've got 200 million or higher. That is liquidity. That gives me liquidity. I want volume. I want stocks that have traded 1 million shares or more. That's another liquidity. Remember, I'm not going to deal with these. I don't want to deal with these, low volume stocks that are hyper volatile, that are susceptible to pump and dump scenarios. I don't want to be there. Okay, it's not a consistent place to be. So I've got 3 liquidity models. I'm just switching my pen to black, so hopefully it shows up more. So L is for liquidity. So I'm also looking for stocks that average over 1 million shares a day in the last 60 days. So I'm building a historical liquidity volume, 60 days or more. They gotta have 1 million shares or more over the last 60-day average. So that way I don't pick up a stock that traded today 1 million shares, but historically trades only about 200,000, right? That's not a consistent level of liquidity. That setup in this search avoids those. Now, the next criteria here is using relative volume to give me momentum. So M for momentum. Relative volume is a factor formula. So it takes the average volume and it divides that by the daily volume. So daily volume, what's happened now against the average volume. Above 1 means it's above the average. So if a stock averages 2.5 million shares, today it traded at 2.5 million shares, that would equal 1. That's a factor of 1. It's like 100%. Now, if a stock averages 2.5 million and today there was 5 million, that's 2 times, that would be 2 relative volume. Okay, so I'm picking up everything has to have traded above their average. That's giving me that momentum. And then the pattern I'm looking for the reversal. So P for pattern, the price crossing down on the simple moving average 50. Okay, so this is an aggressive bearish breakout pattern. That's what this specific search criteria is going to give me. That's what we name this search. So I'm going to get exactly what I asked for. So these 8 matches, let's see if there's any more. Okay, now there's 7. It's a live market, so it's going to go up and down. It'll change. At the end of the day, it's going to be static because the day's over. But right now there's 7, and look to the first stock, PDD. So 50-day cross down below, we have volume, 16.3 million shares versus 7.6 million. That's over double the average volume. Look at the patterns. Let's go to Univar Solutions. Trend line break. Look at the volume, 1.3 versus average of 1 million shares. It's going to be the same thing. Here's Huntsman, same thing. So we talked about saying, I want to find the moment. I want to be at the moment of time where we get that reversal pattern. I've already showed you what happens. You're going to have to, you can go back and look at all the charts to your heart's delight and look for the same pattern because it's repeatable. You can see the exact formula in time. Here's another one, Elanco Animal Health. Look at that trend, reversal, volume 8.2 versus 6.2, and we still have half the day to go. They're all going to look the same because I asked for the same search criteria. So when I'm trading something new, I'm looking for the most advantageous place to be in front of the following move. So from these standpoints here, from these positions, okay, now to walk through the entire setup here is quite simple. I'm going to pull up the actual checklist that our traders have to follow the movement. So that way you're not left alone trying to figure out how to follow the trading setup. It's a very specific method. I'm going to pull it up here and I'll pull it on the screen. And you can take a screenshot of it and take it as your own if you'd like. It walks you through step by step the entire trade setup process because my goal is to have everything set up in advance so that way everything's waiting for the market to trigger my trade. I don't have to do any work other than set up the homework and have it all ready. So on the screen in front of you is the aggressive bearish checklist. This is exactly the search criteria that I had up on the board. Now I'm going to zoom out a second so you can take a screenshot. Let me get more real estate, get rid of my bookmark so I can have free real estate. Okay. So at this point, in GoToWebinar, if you don't know how to do it, you can take a screenshot of anything I have open on the screen. To do that, you've got to get out of full screen. So if you're in GoToWebinar and you're on your computer or laptop, in the top right, you'll see the little double box, double square. Click that and you'll exit full screen. When you do that, you'll see a camera button on the top of your viewing window. That camera button, if you click it, will take a screenshot. So take a screenshot of this and it'll save it to your desktop or wherever you want to save it. Feel free to do so. But what this does is it gives you a step-by-step, starting with search criteria. So you can save this, put this, you don't have to use TradingView. Once again, you can put this on any, you can use, I use Thinkorswim. That's my broker that I use. That's what we use in class to track all the trades too. But if you have Charles Schwab, Fidelity, Tastyworks, if you're outside the US, Interactive Brokers is commonly used by my international traders, right? They all have different ways to search and scan. Okay, so it's applicable. None of this is proprietary to TradingView. The second setup is the stock side, so setting up the trade itself. Okay, so pending entries. I'm going to talk about pending entries in a second. Profit targets, stop losses. If you don't know how to find previous lows, previous highs, I've got lessons on how to do it, pre-built, ready to be viewed. So it's a step-by-step and it's a straightforward process once you understand what to look for. Now, if you trade options, then the option trade criteria is also on the checklist. So we look for 4 criteria in determining which option to trade. Starts with the delta, then it goes open interest, then we have the expiration month selection, and then we have spread as a criteria. So there's 4 criteria to the option selection. See, the difference here is we're focusing on finding the underlying stock to break out. So let's find the stocks that break out, poised to break out, and then we simply deploy the option based on that stock. And I'm going to show you some examples of trades that we sent out here in the last few days so you can see how it all played out. But this is the repeatable process. We use this method up and down the board. Now there's 10 active different strategies that we use, 10 different strategies, but ultimately they all use the same template here, same 10, 20, 50 model, same volume model that I've walked you through today. They're just different entries, different strategies of entering trades using this method, but it's all the same overall overarching template here. Okay, it's just where we're entering trades based off the template. So when we see these types of movements like this, then we already know step by step how to set up the corresponding trade. Now, it's not just red days. We also have the opposite, which is the opposite to the aggressive bearish is the aggressive bullish. Well, so far today, there's only 2 matches so far. It just shows you the bias to the downside. There's only 2 of the opposite search criteria, right? So this is going to give us the opposite look. This is going to give us the green bar running bullish above, right? Versus the bearish getting us the red cross, right? So there's the bullish cross there, right? But you can see just simply understanding which side to be on, you'll see the different corresponding matches shift and change accordingly. It's got a trade trigger, so I'm just looking at my, all right. So I'm going to show you here a recent trade example, and I'm going to show you the corresponding look and feel of how it all works and fires. Okay. So we're going to pull up Snap. Okay. So some of you may have heard about Snap before. Okay. This is Snapchat. But effectively, what you're seeing here on the screen, so you have this entry order, profit target, stop loss. This is the pre-setup. So this trade was sent out, okay, Thursday last week. Thursday last week. This is what the chart looked like on Thursday. So this is what showed up. This strategy is called a snap down, okay, but that's the name of the strategy. It's taking advantage of anticipating the end of a trend. See this uptrend, okay? We're above the 50-day, but we started to break and close below the 10 and 20 up top. So I teach that extensively every single week. But ultimately, this is the method of setting up the trade on the underlying stock. The reason I'm showing you these trades from a few days ago is because I don't set up trades in the live market. All this trading setups are done after the market closes. The reason why is there's less noise and it fits my lifestyle. So I left in 2018 from my former company as the chief revenue officer. 2 main reasons. Number one, I had 2 small children at the time. They were 3 and 4 years old. And I had the typical corporate schedule where I was out in the morning. As soon as I kissed them good morning, I was on the road for my daily commute to the office. By the time I got home, I would be able to kiss them good night and tuck them into bed. So I was missing the entire day with my children, and I decided I didn't want to do that anymore. That's the number one main reason I left my company at the time. The second main reason was I was sick and tired of the revenue grind of coming up with new products every single week. We'd come up with dozens of products every few months, dozens of them, from $200 products to thousands of dollar products. Okay, so it became a grind after so long, constantly just trying to come up with new revenue goals by selling the latest and greatest new thing. Well, imagine you buying a product one week with the promise that it's the best thing you've ever seen since sliced bread, and then the next week, guess what we launch? The next best greatest thing. Then what do you think we launch next week? The next greatest thing. There's only so many ways we can skin the cat. Okay, and so ultimately, I just could not operate at that ethical level anymore, and I decided to walk away. Okay, so those are the 2 main driving factors. So when I got back in the business about 6 months later, I wanted to do things differently. I wanted to focus more on empowerment more on developing one method of trading. And so I have one method of trading. So what you're seeing today is a compilation of what I've learned for the last 16 years, so all the different mentors and different access that I had in my role. And I've developed a method that fits my lifestyle. So I'm very much engaged in my children's lives. I pick them up from school, drop them off from school. I coach my son's baseball team. I am able to take my daughter to competitive cheerleading events because I wanted to find a method that can fit my lifestyle. So I don't have to be in front of my computer all day trading. I don't teach except for one day a week in the live market. And that's because of scheduling a bookend approach where we have 2.5 days between every session I teach. So that way we're always on the market every 2.5 days. So that's why I train Monday nights at 7, and then we train Thursdays at noon. Other than that, the only time I'm in the market during the day is when I'm in events like this. So once the market bell rings, usually about 5 o'clock, I pull up the charts and I start looking for trades to send out to my traders. That's part of one of my services is I send out signals, send out my picks. And so once the market closes, that's when I go to work. And so usually about 30 minutes or less, I've identified a trade. If a trade presents itself, then I put together the trade details and I then send them out via text message and email. So we've got a long track record of over 350 trades. That's all trackable, fully detailed out in a trade tracker in the cloud. So none of this stuff is of these results is theory. We have forward testing, we have live testing, we have signals that go out every single day as a group. So this is one of the recent trades that we had from last week. Now, the key here is that we see a trend reversal on the top side. Okay, big red bars show up. The tell is we had 50 million shares show up for Snap. So remember the checklist, one tick below. Okay, well, the low of the day was $10.69. So Thursday closed. Our entry was at $10.68. Now, I always have a stop loss. So our stop loss is one tick above the previous high, which is $11.39. So my stop loss is $11.40. Well, my profit target is I'm going after a previous low. So that's where we have $8.90. That's a previous low here. So I know where I'm going to get in. I know stop loss. I know a profit target. Now, I don't short stocks outright. I prefer to trade an option, and I'm going to buy a put in this example. So we take this stock setup and we translate it down into a corresponding option trade. And so the option trade is a long put setup, okay? So this is what the actual trade looked like when I sent it out. And I'll show you because it's still open now, still live. And I'm just going to show you what the details were of this trade. And you can see the data was sent out, and I'll show you the tracker with all the details that go with it. So the method of setting up an option is it's a contingency order. It's an OCO order, which is a one cancels the other based on contingencies, right? So based on order criteria. Okay, so I'm going to show you what it looks like so you can see the full details. And this is just a few days ago. This is on Thursday night. This was sent out. So this trade was good for Friday. Okay, it's just good for the next day. We're looking at a daily chart. We want to catch the breakout on that daily chart. So here's the trade details of the exact email that was sent out. So this is sent out on the 16th. So the symbol snap, the order was to buy the long put, March 17th expiration. You're going to select the $11 strike. Now this is based on preference, but I also provide a premium limit. So this limits the amount you'll pay for the premium. So it's a 90-cent limit. So you set that as a limit to the option premium. But you can see the stock trigger price, $10.68, stop loss $11.40, stock profit target of $8.90. So once again, this is all delivered up front. Okay, there's nothing, you have to go back and do research. You don't have to come back into a room to get the latest results or latest update. You don't have to go somewhere to be told what to do with the trade. It's all delivered to you up front. So this is all set up the night before. So the details, and you can see this setup here. I'm going to give you the exact ticket. So here's the trade we're talking about here. So February 17th, it went live. Conservative snap down. There's snap. Okay. So we trigger the trade. It's open now, open P&L. There's our 90-cent entry. Here's the details that was in the email. Everything's laid out here. This is accessible to all of my clients, this tracker. This is the trade ticket. This is the exact screenshot of the ticket. Okay, so this, for many, is going to be a new approach. For those that have been trading, you'll be able to really see quickly the value and the love of this type of method. So you can see here's the date of the screenshot. This is from Thinkorswim. This is what we use to track all these trades. So February 16th, this is military time, so 1820. I'm in Florida, so that's 6:20 p.m. Okay, so market was closed. This ticket was executed and set up. So here's the first order, right? So there's 3 orders in one ticket. So we're telling the broker to buy 2 contracts of Snap. There's the expiration, there's the strike, there's our limit of 90 cents. This is where it becomes conditional. So we're going to buy only on the condition that Snap marks at or below $10.68. This trade will only trigger if these conditions get checked off. You've got to have the price at 10.68 or lower the next day, and you got to have the limit at 90 cents or lower. They both have to go at the same time. Now, there's 2 other orders here that you see, and they're in red. So the green is our entry order. The 2 red orders are the closing orders. It's a bracket trade, bracket, OCO bracket. One cancels the other bracket setup. So that means there's a stop loss, there's a price above, and there's a price below that will close this trade out. So because it's a put, the stop loss is the $11.40. So order 2 is the stop loss. The third order is the profit target. So if Snap marks at or below 11.40, then at or above 11.40, then the trade will close out. It'll limit my loss. If the trade comes down and hits $8.90, then it will close out. It'll be at a profit. The OCO, one cancels the other, is that whatever happens first, it will cancel the other side. Okay, so whatever happens first. So once this trade is sent to the broker, right, it's confirmed, then the complete trade is in the broker and waiting for the next day to open. Okay, it's waiting there for the market. It's all done up front. So I send this out between 7 o'clock and 9 o'clock Eastern time. So that gives my traders 12 to 14 hours to take the signal and put into their account. So that's from via email, that's via text message, and that's also coming from putting in the going to the trade tracker and setting it up. I include the ticket like this, so that way you can make sure that you have your trade set up like this. Now, you don't have to use Thinkorswim. This setup here is not proprietary to Thinkorswim, TD Ameritrade. I have clients all over the world, Charles Schwab, Fidelity, once again, Tastyworks. There's so many brokers out there that my clients use, Interactive Brokers as well, offshore, outside the US, right? They all have access to follow the same type of setup. It's just going to look differently, of course, because your platform's different, but the method is applicable. So the value of this to me and my traders is that everything's done up front. You don't have to wait for me to tell you what to do into the future. You can walk away once it's set up. You don't have to do anything, because if this doesn't happen, if we don't hit 10.68 the next day, then the trade will cancel. It's only good for the day. So the order has to go live, has to trigger that next day, the next trading day, or it cancels automatically. So you don't have to cancel the trade either. It will do it automatically. It's a hands-free, arm's length way to get in front of pending breakouts. That's the goal, is to get ahead of it, not to chase something down. I got a question on how to set it up. Yeah, we got tons of videos about how to set it up. If we have time, I'll set you up a live trade. I just want to be respectful of everyone's time. But this is taking this setup here that we saw in the charts and translating. It's basically taking the underlying stock pattern and moving. So the next day triggers the trade. So we went live on Friday. Okay, I'll show you the P&L in a second. And here we are today, down to the 50-day moving average. So the trade is here, and I'll pull up the account. You can see the trade is down here on our open P&L So this is right now in our tracking account. Here's the snap trade. Right down here. It's up 50%. There's the trade time, right? So this is now 2:21. Okay. You can see exactly how the trade is set up so far. 50% up is still live. Our profit target is still $1 away at this point. This triggers automatically. You don't have to babysit it. When it comes time to exit, we have our exits already set up, already working in the background, waiting to close out the trade automatically. It's only a couple days, okay? All started with finding the underlying stock. So profit target's down here at 890. Last 2 days, there's the trigger point, 2 days in and counting. Obviously, the day is not over yet. So this would be the second day from entry point, okay? So these breakouts happen, both bearish and bullish up and down the board. This was a trade recently too. This is Herbalife. This is a 1-day trade. So we had a setup here for Herbalife. Our entry was right after this big bullish bar. You all can start to see the formula on why we enter these trades. So we were here. This was last week as well. So we had a buy set up on after Valentine's Day. We had a buy right on top of this. I'll show you what it looks like in the account. It's now closed. It was a 1-day trade. It's down here. Here's Herbalife. So 215 went live. Herbalife, 92% profit. Bought it at $1.90. Closed out automatically at $3.65 on the option. All the details are here. This is where we trigger the trade. Let me zoom in here so you can see it more clearly. Same setup as before. Oh man, it's not gonna let me zoom in more than that. What in the world? Oh, that's too hard to see, isn't it? But you can see the green and reds, right? Same setup. This was set up on Valentine's Day on the 14th because we're setting up for the next day. Now there we go. Screen's all messed up. There we go. So ultimately, all of these trades, so there's two sides of the program. You have what's called the options profit generator. These are low cost option premiums. And then you have the RPM, rapid profit method. So between these two, and the program today, you have access to both of these. These are just two different programs that we now include as one that started a couple months ago, but they're just tracked in two separate trackers because of how many trades there are. But there's 40 trades here. This is a recent strategy that we rolled out, but options profit generator has been around since August 2020. So when you add up all these nets, okay, so we talk about results, 3,178% net profits. So this is a total of all of the individual trades added up together, okay, since August 2020. So 3,178% positive net gains. The way you figure that is simple. 3,178% is a factor, okay? So these are not used using some mystical account where, oh yeah, you started with $1,000 and now you have $3 billion. Okay, that's not how this number is used. So this is a sum of the profit from entry versus the closing price of the premium, right? So Herbalife, we bought for $1.90 per contract. We closed at $3.65. Well, that's 92%. Trade before that was Community Health. Bought at 85 cents, sold out at $1.80. 15 days later, that's 111%. So this is not tied to a made up number of dollars that were invested. Okay, it's literally a sum of each individual trade's results. There's winners, there's losers. You add them up, that's the net at the end of the day, 3,178%. So the way you translate that number to you individually, I like to be transparent up front, is take your average investment size. Let's say it's $1,000 a trade. I don't know. Let's just use 1,000 to make it easy math to start. Well, if I traded $1,000 per trade since we started this, then you multiply your 1,000 times 31.78. Okay, so it's about $31,000. That's profit. That's not including what you put into the trade. That's on top of that investment. If you have $2,000 average per trade, right? That's $62,000 in profits. And of course, the more you trade, obviously, the more that percentage would impact you. So the strategy works. It's not new. It's being used every single day. It's being sent out with live trades all throughout the week. So the comments about hindsight 2020, sure, 100%. But those are real results. Those are results. You can't change the results because I sent them all out in advance, right? Every detail is sent out in advance. Just as I showed here, all of those trades look like this when I sent them to you. So it's not like I can go back in and say, oh, wait, no, we got out here. Well, no, this was the plan, and it either hit or it didn't hit. There's not there's no area for me to change this because I already sent it to the universe, right? It's out in the cloud. It's out into the world. Now, the only times we adjust these, and there will be times, is if we run up against expiration. So within 7 days of expiration, I send out details of how to manage the trade, but I send them out in advance of the next day. I don't send out a market update like in the middle of the open market. I won't do that to anybody because my traders don't typically trade in the market hours. They follow me, and so I set up everything at night. Now they'll look at the chart throughout the day, of course, and I've got traders that trade my strategy independently of my signals because this method I use is teachable. I teach it all the time. This is the one method I use. And so they adapt it and they use it to their own devices as far as different levels of options trading and whatnot. So I look to more of my trades I send out as more of a courtesy to help the learning curve so you can see how and why a certain trade was sent out. So that's why I send them out is more for education, though many traders use it to follow the profit side of it. But I don't like to set up an environment where you're hooked on me forever. It's just, to me, that's not empowerment. Okay, I'm not trying to lock you into me for the rest of your life. I want to empower, and that way, no matter what, you always have an ability to look at a chart and know, number one, where's it going? Number two, when is the best time to be getting into it? Once you can find that, then setting the trade up, though it's different, right? A lot of you are asking for, well, can I get videos on it? Yes, 100% you can. Setting the trade up like this, I've got 3 lessons, 5 minutes each, so about 15 minutes worth of lessons, and you'll understand how to set the trade up like this. It's just a different order execution. It's not proprietary to one broker, right? It's widely available. It's common, defined, and widely available across the board. It's just many people haven't used it to the degree that I use it and my traders use it. And you're not the first group that's seen this. I've got well over 500 traders that follow this method, that follow my signals, that follow my live trading room every single week. So once again, none of this is theory, only theory based. It's backed also by hundreds of trade to the penny trade details and trade tracking. So it's not new by any means. All right. So I just want to highlight that. I'm just gonna look at some of the questions real quick. Just to make sure I didn't miss anybody, because typically this is where I get a lot of questions about the setup side. Oh yeah, we have all this in our video training, 100%. This is, once you can get through, all you have to basically get through is getting through just the placement of the trades themselves. And the harder part, I say harder, but the hardest part is just understanding, okay, where are we going to set the entry up? Okay, understanding that method, understanding from that point where to set up the triggering process, meaning, okay, how do I set up the trigger? What is that price I'm going to trigger? I send you details, right? So don't forget, I'm going to send you trading signals. So you'll see live signals coming out to go along with the signal. So you'll see the screenshots, you'll see all the intimate details you need to execute the trade. You'll see the screenshot of the actual ticket, so you can see, how the OCO order is set up, how's the stock trigger price set up, so that way you can have all of the exact details lined up for you. Okay, so none of that's going to be new to you. It's all going to be there. in advance, right? And once again, a lot of that is used to just help the learning process. Ultimately, everyone's different. Some of you may just want to do it yourself. Some of you just may want to follow along with me for the first several weeks. Everyone has a different learning curve, but by no means is this something that takes months and months to figure out. Usually it's a few weeks and you'll start to really understand the process. Now, your confidence is going to be, based upon several factors. How well are you confident in placing trades, period, right? How many trades have you placed? That's going to be a factor. So what I always recommend if you're new to trading, especially even if you're new to trading options, is that you start first by placing practice trades. So when I send you signals out, just place them in a practice account, right? There's plenty of signals, there's plenty of opportunities that we'll be sending out. There's no reason to rush to miss the next trade, because ultimately the goal, once again, is to empower more than just become reliant upon me forever. I want you to be able to walk away knowing exactly why a particular trade was sent out, and not just be, stuck to waiting on me all the time. Now, everyone's time changes too, right? So there's going to be different shifts of time that takes place. Some days you'll have more time than others, that's fine. But to follow my program, it doesn't take more than 15 minutes to set the trade up. Once you understand the process of setting the trade up, every time I deliver a signal to you, it's only going to take you 15 minutes or less to follow along. When you get good, we get up and running, it's going to take you, 5 minutes or less. Some of my traders have been with me for years. It probably takes them 60 seconds, maybe 35, 45 seconds to run the strategy and to get it set up right. But, once again, everyone's got a different, level of understanding when it comes down to it. But good question there. Question on the timing side. So it's good for the day. Now, I some trades, I'll say this trade is good for a couple days, a week, but I give you the exact days it's good for. So if you look at, where did I put the tracker? Yeah, so if you look to the tracker, it says entry good till. So there's a column here for entry good till. So you can see the dates filled out here. This is new. We added this recently for people's added data, but you can see we tell you how long is this trade good for. That's the entry. Okay, so the entry has to hit by this date. You come to RPM, you'll see the same thing. See all these dates. So that entry trigger has to take place before that date ends. Okay, so most of the time it's good for the next day, once again, but that is literally what is the trigger point. It's the final go moment. It's the most important price. So the pending entry, the ultimate value of it is that it will only take us live if that price breaks out. So bearish, it's got to be below, right? Because we want to confirm that the market is going bearish, right? That's the whole intent of it. We want it to go bearish. So at this point, I've got questions on the program. So what I'm going to do is spend the next 5 minutes. I went over the time that I had planned, but ultimately, like I said, I like to think of these more of a workshop than I do, a lecture. So I wanted to make sure I was answering your questions and taking you through the patterns. I wanted to show you the checklist, give you time to take a picture of the checklist, and make sure that you had, at a minimum, you were able to walk away with a specific actionable plan. If you want to go play with it yourself, go for it. I would challenge you, if you're going to do that, go look at any of your charts, any of the trades you place, go pull up any chart of your choice, set up your charts like I had them, 10, 20, 50, and go back and look at them. And I can promise you, you're going to see a ton of alignment into the corresponding breakout that followed. So the program is the Rapid Profit Method Plus program. Okay, it's email alerts, SMS alerts, and it's access to the cloud tracker. Trades are sent out every single day. I want you to keep this handy, rapidprofitsmethodplus.com. Write that down. This is the URL, and I've got a special offer for you for today. So rapidprofitsmethodplus.com is going to be the special website with your offer. Now, you're also going to receive 4 bonuses. Bonus 1 is my live trading sessions. This is my Market Pro Live Club sessions. These are twice a week live, Mondays at 7, Thursdays at 12. They're all archived. They got hundreds of hours of broadcast time that you can go back, review. The best way to utilize the archive, and I'll get into detail, is to go back to major events and go see how we called it, right? You talk about hindsight. Well, go back in time and see what we had, because we didn't have the future. If you go back to August 16th, when we had our last high and fell off after the Jackson Hole, Wyoming speech by Powell, August 16th, go back to a chart, you'll see the market fall off. We were talking about that upcoming pullback in class. That wasn't new to us. You're also going to get my empowerment toolbox. This is where all my lessons are. So I've got over 10 hours of strategy specific lessons. So the strategy I showed today, we've got lessons to back it up so you can access those resources too. We've got all of the checklists. There's 10 checklists in total. The 4 core checklists, of course, are included. All of my watch lists that we use in classes, all of the lessons on setting trades up on autopilot are all here as well. So I'm going to give you all of those toolbox resources. For those that are new to options, or maybe you're trading options and you want to move up a level, then I'm going to give you this Options Master Academy. It's a value of $800, and this is a huge resource from those that are brand new to options to those that, once again, want to move up levels, right? You want to get more advanced. I've got advanced lessons here, over 40 plus option strategies available here. Money management training is one of the most underutilized and under-taught components of successful trading. And I want to include my money management training as well as a 4th bonus. So when you take a look at the Signal program itself plus the bonuses, it's a complete education, live trading room, and live signal program. It's all 3 of the most important and most used components. So we're going to make sure you have options training, quick start options training, so you can demystify options trading. I go through a different way, and I use different data on the option chains that I'm going to share with you here as well, how to find volatile options to make sure that we have the biggest profit opportunity on the option selection. So that's where you find those lessons. Obviously, I'm going to show you how to use the options checklist there. We're also going to make sure you've got the autopilot. Okay, so this is all the additional lessons on how to set up automatic trading orders, the contingency orders. I only showed you one way, which is trading options. We also use this for multiple profit targets on stocks. So there's 4 different ways we use autopilot setups that I'm going to teach you here. As another benefit, we're also going to make sure that you have all the different checklists. The checklist to me is where we can repeat our successes and avoid repeating mistakes. So I've got clients that print these out. They print out, 30 at a time, so they have them ready, and they keep a log. They track their trades. Some of them are more data driven, so they like to track things manually, alongside of a checklist. So and then others I have just follow it up on their computer screen just to make sure they don't make a mistake. But you're gonna have access to all the different checklists and all the different calculators that we have. Of course, money management, big opportunity here to improve your trading. It's just by simply how you manage your money. All right, so we're going to talk about different ways to increase your profit opportunities just by simply managing your investments per trade. Okay, so we're going to include that. And then this is a further breakdown of the live trading room. Okay, so this is what you're going to have access to for the next year. This is a 1-year program. Mondays at 7 o'clock, Thursdays at 12. They're all archived, so don't worry if you can't make it live a session. You can go back and watch the archive. But this is where the rubber meets the road. Okay, this is what I talked about earlier, where we knew to expect the red days. We knew we were in a retracement phase on the SPY. We already knew we were slowing down, also with the NASDAQ as well. And that is all done and uncovered live, so that way you can learn and see the strategy used as both an analysis forecasting standpoint, and then obviously we also go into trading opportunities. So we identified some areas of opportunity last night to focus on today that are bullish. So we actually found some bullish opportunities today in that session last night. But I love this because it's adaptable to what's happening now. It's the most relevant to the now in the market. It's not just lessons of months in the past, where I'm with you live in the market in the current conditions, applying the strategy alongside of you. This is my most favorite piece of the program. So I want to include this obviously for the next year to help you accomplish your goals. Now, as a special bonus, we're also going to include some added literature. Some of you like to read. I like to read as well. But these are 3 phenomenal resources And this is from a hedge fund trader perspective. That's what these are generated. I didn't generate these. This is not my commentary. This is not my research into these. Our team of researchers here have gone out in the market and they've searched and they've found 39 investing secrets of the Titan value investors. So value investing is a concept made popular by Warren Buffett. Okay, but it's not just Warren Buffett here. It's other like superstar investors that made up these special reports. So the Titan value investors 100x rule is, and these are huge volume. These are hundreds of pages in each one of these, hundreds of them. So lots of content, but this one in blue is exciting because what this does, it helps to break the formula down on how to identify the next Tesla, because that's a theme here of this book. The 100x is 100% results, returns, 100-time return. That's what this is. So this program is valued at over $8,000 for the year. What we're going to be doing is giving you access to everything that you've seen, daily signals. I mean, it's 1 to 2 signals a day. So in a week, you're talking 10 to, sometimes 12 signals a week, right? So in a month, you're talking 48, signals. Now, not all of them go live, right? Some don't hit the trigger point, but, definitely tons of volume. $798 per year. Now, for those that take action now, I'm going to make this even easier on you. For the first 10, I'm going to give you a special coupon code, RPM200, and you're going to use that in the coupon code on the checkout page. That will save you $200. So for $598 for the year, for the entire year, you're going to get daily signals sent to you via email, SMS, and also access to the trade tracker, plus the 2 live sessions a week. Those sessions are 2 hours a week. I mean, a session, excuse me. So that's 4 hours a week of live trading, live coaching, live mentoring. Just that one component by itself is worth thousands of dollars a year. But the reason we're able to do this, the reason we're able to offer the price this low is because of strategic business decisions that me and my business partner have made and our company has made to focus on providing the lowest cost, to focus on helping as many people as possible. So as you recall, I was a chief revenue officer, so we had millions of dollars a month we spent in marketing budget and sales budget for our sales teams. We don't have a sales team. That's intentional. We also do not spend any significant dollars on marketing, getting traffic to our sites. We leverage partnerships. I've got a Rolodex of partners that I've worked with throughout my career that we've now partnered together to work on getting this program out. So we eliminate 2 of the largest overhead pieces of any other business in this industry. So that allows us to focus on support and live trading. And so that has allowed us to put the price at this level, because many of you in this market know that any course, any offer close to what I've offered today is being sold for thousands of dollars. I built those types of programs, but I also know different ways to build it where we can make it affordable and ultimately lower your overhead. So the reason I like this smaller price point is because there's lower anxiety on your end to have to cover this overhead, right? Because anytime you buy education, anytime you buy technology, right? Anything that you do outside of buying and selling in the market is added overhead. So if I can eliminate and lower that overhead for you, then we're more focused on empowerment, we're more focused on growth and getting better than trying to worry about making up $2,000 of cost up front. $598 already showed you 2 trades that would cover this already in just one trade. You already cover your entire year of, that's one trade. So it doesn't take much to cover this, and that's intentional. It's intentional that we don't have a huge marketing budget, that we don't have a sales team that's going to be on the phones with you all day long, because that incurs overhead costs. So when we have lower overhead, we're able to pass the savings on to you. So if you have an interest, if you're willing to give me an opportunity to prove this works, you'll only know if it works if you actually follow along. I mean, you can sit on the sidelines all day long. Many of you have seen this offer before and you haven't yet joined. You're getting every single options program that I deliver. Any option signal I send out, you get with this program. There's the options profit generator and there's the rapid profit method. I only have 2 programs. This rapid profit method plus gets you in both of them. So you get both of them. If you are a client and you only have one of them, then let me know in the question section. You can upgrade to this program if you just have one or the other. So let me know if that's you. I recognize a lot of you here. Some of you may not have both programs, but if you're new, then you have an opportunity to get both at an amazing price. $598 for the year for the first 200. So go to the site now and make sure that you get that $200 savings. Now I'll show you where it is. I don't want you to mess up and hit the wrong button. I want you to get the coupon. So I'll show you what that looks like. I also want to let you know that there always exists a level of indecision, and most of it is around fully realizing if it's going to work for you or not. So as I stated, if you like what you see but just not quite sure it's going to work for you, it's okay if that's you. It happens. I want to make sure that you have an opportunity to go through this without any risk. So what I'm going to do is I'm going to give you a 30-day unconditional. Okay, there's no conditions to qualify. You don't have to watch so many hours of lessons. You don't have to play so many trades. You don't have to jump through this many hoops, which unfortunately is a typical thing in the market. It's simply time-based. So from today and 30 days from today, I'm going to work to earn your business. I'm going to send you signals. I'm going to show up to class. I'm going to show up and strive to be better than I was in the last live session with you. At the end of that 30 days, if I have not earned your business, then simply let us know. We have a text message support service line. We have an email support service. We have a support hub, an online support hub area as well. So we have 3 methods of support. All you have to do is contact us through one of those 3 ways and tell us, hey, I want my money back. You don't have to give us any details. We're not going to chase you down. We're not going to run you down and try to convince you to stay. I've learned a long time ago that it's always better to part as friends. If things don't work out, there's no reason to be hostile. There's no reason to try to be mean to each other. Just say, hey, look, man, I appreciate it. It's just not for me. Okay, that's fine. We'll give you 100% of your money back. I'd rather part as friends than try to work through and hold somebody's feet to the fire to stay for some, unknown, unmade up reason. So simply put, if it's for you or not, you won't know today. You won't but you will, I promise you, know within 2 weeks. 2 weeks is my guarantee. If you show up to my sessions, if you follow along with my signals in 2 weeks or less, you're going to know it's for you or not. The extra 2 weeks, think of it as bonus time to really just see everything play out for a full month. And once again, if it's not for you, just let us know. You can email, you can text, you can go to create a case online if you want. Whatever method is best for you. You can come to my trading session and tell me, whatever makes most sense for you and what's easiest for you. So rest at ease knowing that you do have a 30-day unconditional. There's no conditions to it. I'm not gonna track how many times you showed up to class. I'm not gonna track your trading accounts. It's just that would require more overhead, right? That would require more bodies on our side, and I would rather work with those that are interested, and the only way to do that and make it affordable is to manage overhead effectively. So for $598, you're getting a full complete program. You're getting education, you're getting live trading, and you're getting signals sent to you, plus all the additional resources, checklists, video lessons, calculators that we have built up in our archive. So tons of content, tons of resources. And it's for the entire year. If you like it after the year, then you'll lock in this low price. So when you're on the page, I want to make sure you take advantage of it. My team's going to let me know when we run against the 10 limit. I'll let you know when that happens. If you're on the checkout page now, maybe you're not as fast as everyone else. That's fine. Let us know. Say, I'm in, and that way we can track you, so we can make sure you get the $200 coupon. If there is a mistake because maybe you went too fast, I understand it happens. Okay, let us know and we'll rectify it with you. We'll make it right. Okay, so It does happen, a few people will just get too quick and check out fast. So here's the checkout page. Okay, it's a redirect. So when you go to Rapid Profit Method Plus, it's going to take you here. This is a special page for Investorexpo. You'll see more information about the program if you want to read more about it. But if you want to take advantage of the coupon code, come here, click on this red button. That'll take you to the add to cart. Once you go to add to cart, then you'll be on our secure checkout. So we have Concordia Financial Exchange and Accelerate Financial Group. Okay, so this is one in the same group here. So you'll see Accelerate Financial Group, that's us. Okay, I own Accelerate Financial Group. That's a partner with our supporting team, Concordia. So Concordia Financial Exchange is where we teach and trade. Accelerate Financial Group is our publishing arm. So that's where we publish, different reports. So just for business purposes, we have Accelerate Financial Group. You'll see that on the receipt. That's my publishing side of the business because of our published content that we included here. Okay, so that's why you'll see Accelerate, but it's same group. We're the same group. So once here on the checkout, you'll see it's secure. It's got the lock on it. Okay, connection is secure. Your information is private when it's sent to the site, passwords, credit card numbers, all that good stuff. So the coupon code's down here. So make sure you come to coupon code and apply it. So RPM 200, and then you want to hit apply coupon code. It says coupon applied successfully. When that happens, you'll see the $200 taken off on the bottom. So $798, still phenomenal price. But once again, for those first 10, you get to save $200 and get the entire year for $598. Okay. Now above that, you have an opportunity to add on another report pack. Okay, so this is more tangible hands-on data you can use. Okay, so you have 4B's checklist. This is more from the hedge fund. In fact, Bill Ackman is a big contributor to the 4B's checklist, his concepts. You have Investing Secrets of Warren Buffett, Sir John Templeton's Law of Investing Success, and more Momentum Breakout Trader videos for $49. You can add that if you like. Okay, it's up to you. It's optional. Optionable if you want to add that on. It's an option. Anything you buy today is under the 30-day guarantee. So if you want to add it on, it simply adds to your order. So $647 if you want to include the other reports that we have available. If you want to do that, once again, that $647 is also under the 30-day guarantee. Okay, so great time to get started. This is paramount to be ahead of the curve, to understand how the markets are shaping up. We're dealing with a deep retracement. It's not nothing alarming until we start breaking down the 50-day. Okay, so we're looking for support, and it needs deep support. So we'll see if that holds up. But we're on top of it. Every single week, every single session, we're on top of the latest market movements. And so the value, once again, is no longer operating in a place of indecision, a place of shock and awe is how I like to describe it. Shock and awe is where you don't know, you had no idea something was about to happen, and a market sell-off, right, is an example of, where you would potentially experience a shock and awe, and that's not a pleasant place to be, because if you can appreciate and understand that we have a potential for several red days, well, then you can start managing your trades differently, right? I mean, you could start saying, okay, I'm going to unwind some of my positions I've been in, right? So most of my traders just don't only trade my signals, right? You have multiple portfolios. You have an active portfolio where you're following along with more of a active, swing trading model like I use and teach. Then you also have a portion of your portfolio that's in long-term investing, right? Where you're building a long-term hold portfolio. Maybe, those big names, Apple's, Amazon's, Meta's, Occidental, maybe it's Exxon, right? You have those big names, maybe it's Walmart, right? You've got portions of your portfolio that you're adding to and building, for your retirement years. Well, understanding the flow that I teach, you'll know when it's time to lock in profit. You'll know when it's also time to buy back in and how to buy back in, right? And that's an over-encompassing type of approach. So we've definitely gone over a long time. You all have stayed through. I can't believe how many people have stayed here, and we still have several hundred people here today. So at this point, you know, I just recommend you take the step and try it out. For $598, that's way less than you place per trade on average. I know that for sure, based on how much experience I have in the market. So definitely, instead of just walking away going, yeah, it looks pretty cool, I just don't really know if it's going to work, it looks too simple. If you thought to yourself you think it's too simple, then I've done my job. In fact, that's a compliment, because like I started off the presentation, that's my goal, is to make it simple. I'm not trying to make it complex. And I certainly can, if you like. I can make it complex. I can roll on more advanced ways for you, and I do so in classes, but I don't like to try to wow with complex. Some of you have seen those presentations, right? I mean, they talk like they're a rocket scientist, and then you get so excited and enthused because of how complex the strategy is that it takes you months to figure out, if you even can figure it out. It's just too many variables, and unless you have the time to sit in front of your charts and to practice and practice and to research a new strategy, most of our daily lives are not available to try to become that type of master level proficiency. So that's why I love this strategy, because it doesn't take more than probably a few weeks to really put it all together. I mean, I'm talking about fully understand how it works, not just, you know, push a few buttons, but actually understand how the relationships work together in the market. But that's, to me, what's been born from the lifestyle goals that I have. My goal isn't to trade, you know, daily. My goal is to make enough, provide enough, so I can be with my children, and to be that actively engaged spouse, right, in the house. We have a lot of fun stuff. I've got a big old dog, right? We like to be active, and I like to enjoy this time, because I know one day, you know, my daughter's not going to want to hold my hand when we walk through the mall, walk to Sam's Club, right? I know one day she's not going to say, "Daddy, can you tuck me in?" Right? Those times are going to come. I understand it. But while they're here, I'm going to take full advantage of it. That's my goal. And that's how I try to steer my focus and steer my life around my trading. All right. So ultimately, at this point, I'm going to wrap this event up. You know, many of you have seen this before and you have yet to take the leap. I recognize your names. You know, at some point, you know, you're going to keep coming back and you're going to see results after results after results. Give us an opportunity, give us 30 days to prove it, that this can work for you. It's just $598. It is less than you pay that you invest per trade. I'm taking the risk away. I'm going to put that 30-day guarantee out there. So if you're not satisfied, you're going to get it all back. So for those signing up, I'm going to leave our customer service number up here. You've got our phone number. You got our email. So for those that signed up, you're going to get your invoice. You're going to get your receipt. You'll get your welcome email, and then you'll follow the get starting track, and you'll be up and running. So tonight, I would expect your first signal. It is Tuesday. It's 2:19. So here in about 4 hours, you'll get your first signal with us. So appreciate you all. Happy trading, and I'll see you all in our next live session.